This is the Asia Trade. I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set for a positive open after Wall Street's best start to a presidential term since 1985. Traders looking ahead to this week's Fed decision amid lingering inflation worries. Big US tech earnings also in focus. Shares near record highs. Valuations may be looking stretched and profit growth seen at the slowest in 2 years. And Korea's president reportedly indicted on insurrection charges, potentially extending his detention for up to 6 months. All right, let's take a look at how we're tracking for the start of the new week. We don't have any trading in Australia, however. Markets closed in observance of the Australia Day holiday, which was actually yesterday. But we do have the market trading in New Zealand, a little bit of weakness there, off by about 0.5%. We'll have trading today in Japan as well. Korea is going to be closed for Lunar New Year, as are a number of other markets, including Taiwan, Vietnam. Indonesia is going to be closed as well for Isra Miraj. But we've got futures in Japan currently pointing higher, a little bit better than 1%. We've seen a bit of strengthening in the yen, although that's a relative term these days. Of course, the Bank of Japan did tighten on Friday, as expected. The policy rate in Japan now 0.5%. That's the first time we've hit that level in 17 years. Taking a look at the yuan, meanwhile, continuing to weaken against the US dollar. We're going to have PMIs out of China a bit later on for the month of January, and industrial production as well. Those PMIs seen staying steady above 50 there. It was a good end to the week for US markets as well. Big tech is hovering near record highs, as I mentioned, but we've got Tesla, Apple, Microsoft, Meta all reporting this week. Profit growth forecasts might come in slower there. The slowest, in fact, in almost 2 years. We'll dig into some of those names a little bit later on. We've got NASDAQ futures a bit softer ahead of this big week, off by about 0.8%. Crude prices softer as well. We did see oil posting its first weekly decline this year. Of course, after President Trump called on OPEC to lower oil prices. We're going to have big oil earnings towards the end of the week as well from Shell, ExxonMobil, Chevron and IOC. Right, and in that backdrop, of course, we do have a Fed decision coming up as well, and inflation not gone yet. Still very much the talk of the town in Davos at the World Economic Forum. Let's take a listen to a couple of remarks that were made regards inflation.
Inflation can hit us again, but I would also say, if you look at where the bond market was even a year and a half ago, when we were experiencing very elevated inflation, we had a very inverted yield curve. The short rates were higher than the long rates. What we are seeing now is a normalizing of the yield curve, but I also believe we're going to have a much more steeper yield curve, and that's a function of forward inflation expectations.
Most of the body of the genie is in the bottle.
Kind of getting stuck there, though.
But the legs are kind of hanging still out. We need to push it all the way down.
All right, IMF Managing Director there, Kristalina Georgieva. Also, BlackRock CEO Larry Fink discussing efforts by central banks to tame inflation. And on the topic of central banks, we're going to have rate decisions, of course, from the Fed this week. Also, the ECB and US policymakers are widely expected to hold rates steady against a backdrop of healthy demand and that stubborn inflation. Fourth quarter GDP growth data is coming out on Thursday. That could also show that the US economy remained on a solid footing at the end of last year. In Europe, meanwhile, a 25 basis point cut from the ECB seen as a near certainty. Policymakers there weighing Trump tariffs and inflation risks. Here in Asia, meanwhile, much of the region is going to be observing the Lunar New Year, and that starts on Wednesday. Japan's also going to release a deluge of economic data, with its jobless rate likely holding steady in December. Tokyo's consumer prices also probably picking up this month. All right, let's get some more perspective on the global economy. Joining us now is Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis CIB. And Alicia, I want to start, if I can, with that Fed decision. I know you expect a pause. You're obviously not alone in that sentiment. But what do you anticipate after this meeting in terms of how much easing to come and when it's going to happen?
Well, we have three full cuts, actually, 75 basis points, which is beyond what the market is expecting. And I think there's two reasons for that. First, we actually think that Trump's approach to tariffs will be much more constrained than perhaps we would have imagined during the campaign. I think we already see that. So just 10% for China by 1st of February might not even happen. We may get small deal there. We had this sudden increase in tariffs on Colombia, but that was not on the map. So what I'm trying to say here is that Trump will use tariffs in a limited way, but to get a lot of results out of that. And that is not necessarily the most inflationary way to use tariffs. So that's why we have three cuts for the US, for the Fed this year, starting in May.
As you say, your view on three cuts is outside of consensus, but what risks do you see to that outlook? Because we just heard, of course, from Larry Fink, Kristalina Georgieva, warning that the inflation beast is not quite tamed yet, and that's something the Fed's warned about as well. So do you see there is a risk of inflation returning in 2025?
Yeah, I mean, this is just our baseline scenario. We're hoping that Trump will realize that tariffs are not in his interest, at least not high tariffs. And there's another risk, which is deportation. I think he's moving ahead more on that than on tariffs, as we can clearly see. And that is also an inflation risk. However, migration policy also has an impact on growth, meaning both. Growth will be lower and inflation might be higher. So it's kind of stagflation scenario, and that has different implications for the Fed. So again, that's a risk, surely, but again, moving more on deportation than on tariffs is a different type of risk on inflation.
Yeah, but the trade story is a volatile one and hard to predict. I mean, we'll be touching on a story a little bit later that Colombia is having a 25% tariff imposed on it by the US because President Trump's not happy that the president of Colombia did not allow military transports with deportees to land. So, I mean, that's an illustration, isn't it, of just how hard it is to predict this story. But I know at the same time you see a quick fix on trades post-inauguration. Obviously, it's in the interest of markets to do this. It's in the interest of China to find a way forward as well. Can you give us some sense of what this quick fix might look like in your view?
Yeah. So first of all, Colombia, I'm sure Petro is already working on how to avoid these tariffs. So, the different bargaining power, from, Trump's side and Colombia already shows that any government, and this includes China, is going to do anything possible to avoid these tariffs. And especially because we're no longer talking about everybody's tariffs. We're talking about very targeted tariffs. So if you're targeted, you lose. And if we move to China from Colombia, what this means is that China will offer whatever it takes, really, literally, to avoid tariffs on the 1st of February. And what that means is importing shale gas, importing Boeing, importing soybeans, importing anything that China can import quickly to show, what's the price to avoid those tariffs. And that price still China can take. It's not a big deal. So for me, I wouldn't call this a phase 2 deal because it might be more narrowed, but I would call it a winning short-term deal for Trump to start on the right foot with China, which would also avoid a market collapse. The market will figure that Trump is on a winning position, which will then avoid tariffs, at least for some time. So I think we might get a small deal of big imports from China from the US by February 1st.
We've also heard President Trump applying pressure on OPEC as well. He wants a lower oil price alongside of this pledge to drill more and ramp up US production as well. Do you feel that a lower oil price would improve growth, not just in the US, but in the Asia Pacific more broadly, or is the demand just not there at the moment?
Well, it will also improve inflation expectations. So again, Trump is working on this kind of convoluted way to avoid inflationary pressures from his policies. He's also achieving a weaker dollar lately. So, there's a lot going on here. And I think growth-wise, I think for oil, there's always some demand. I mean, let's face it. Yes, of course, say India is slowing down, or, China is still, prospects for growth in 2025 aren't really massive. If anything, they will try to hit 5% again, but it's not a collapse in demand anywhere. So I think there will be demand for oil, especially with lower prices, and therefore this will be another winning point for Trump to start his presidency. So it's quite impressive that he can do this just by the mere fact that everybody's fearing his actions. Yeah, that's what it takes. And Colombia is a good example. Everybody's watching, even if it's not a major thing, but everybody's watching, and everybody is expecting Petro to retract, and everybody else will do the same very soon. So he's getting what he wants very, very quickly.
All right, Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis, is going to be staying with us. We've got a few more topics to unpack as well. But in reference to that Colombia story, let's take a look at how haven foreign exchange is performing. We've got the Mexican peso continuing to extend losses against the greenback, trading as a proxy for that Colombia story. Just to update you on that, President Trump threatening immediate 25% tariffs on Colombia, increasing to 50%, plus sanctions on individuals. This is over the failure to allow 2 military planes containing migrants to land. So that story's still unfolding. We've got Colombian assets heading for a rout. Bloomberg senior editor Wendy Benjaminson joins us now. So, Wendy, give us the background to this story and tell us where we are at the moment.
Well, as we know, Trump has promised to impose tariffs. He has said for trade to benefit U.S. consumers on trade, and as a diplomatic tool. We never thought it was actually going to be used this punitively and this quickly. So what happened today is that Gustavo Petro had initially said migrants could return to return to Colombia, excuse me. But the problem was that Trump wants to use military planes, even though they hold far fewer people than a jumbo jet. But he likes the image of these big military planes landing, and foreign leaders do not. They do not want U.S. military planes landing on their soil, and so Petro canceled the flights or refused to let the flights land. And within hours, maybe even less than an hour, Trump imposed these tariffs on Colombia, and less than 3 hours after that, Petro retaliated with tariffs of his own.
So, you mentioned there that this really is an argument about optics. Petro is happy to take those deportees back, and I understand that he's offered the presidential plane to ferry migrants in place of military transport. I mean, on the face of it, it does seem that there is a way out of this. How likely is that?
Yes. It's probably likely. I mean, Colombia is a strong ally of the United States. It borders Venezuela. There's all reasons for the U.S. and Colombia to continue their long and warm relationship that's really been around since the cartels were sort of neutralized in the 90s. And so really, I think, Trump has a big bark, and his bite is often less than his bark. And so it could be that the two of them will come to some terms in the next few days. The foreign minister of Colombia has already offered to talk to them. Secretary of State Marco Rubio is heading down to the region. He was actually going to Panama, also a bordering country with Colombia, but he was planning on going to Panama to deal with Trump's desire to assert U.S. power over the Panama Canal again. He has no plans at the moment to go to Colombia, but we'll see how this shakes out.
Yeah, never a dull moment. Wendy, I also wonder if you can update us on what's happening in the Middle East as well, because President Trump has pledged to send 2,000-pound bombs to Israel. How does this square for the desire to accelerate peace efforts in the region?
Well, I can't speak to whether Trump thinks this will accelerate peace, but the U.S. has sold these bombs to Israel before. President Joe Biden, when he was in office, suspended those sales, really angering Prime Minister Benjamin Netanyahu. But that was the way that Biden decided to try to limit civilian casualties, or at least American fingerprints, on Palestinian casualties. So he refused to give Netanyahu those bombs. Now Trump is saying, let's keep selling them because he thinks it will help end the war more quickly. Of course, it does greatly increase the possibility of more civilian casualties. But just in the last little bit, it looks like the U.S., Israel, and Lebanon have all agreed to extend the Israeli-Lebanese truce through February 18th, so that Israeli troops have more time to withdraw from there. And Hamas and Israel have seemed to agree, have resolved this dispute over a few hostages that were supposed to be released and weren't. Hamas has now said they will release those on Thursday, as well as 3 more hostages on Saturday. So I think we're gradually getting to a point where, these hostages are coming out. I don't know whether that will stop Netanyahu from continuing the war or not. We'll have to see.
All right, Bloomberg's Wendy Benjaminson there. Still to come on the Asia trade, we're going to discuss the outlook for the yen after the Bank of Japan's recent hike with Keio University. Also, why Quadratic Capital Management sees upside potential for rate volatility. This is Bloomberg. We're set to get China's January PMIs later on Monday. Bloomberg Economics sees the official survey showing soft momentum in the manufacturing sector carrying into early 2025 as production starts to wind down ahead of the Lunar New Year. Services, in contrast, might get a boost from holiday-related travel. Let's bring back Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis CIB. Alicia, thanks so much for staying with us. I just want to get to your expectations around those PMIs we're waiting on and the health of China's economy more generally. What are you expecting to see today?
Well, we have had quite constructive PMIs lately, and frankly speaking, January and February PMIs are not very informative for obvious reasons. So, I wouldn't pay too much attention. Also because that constructive PMI that we have had, yes, it is in line with fourth quarter GDP, which was quite positive, as everybody knows, but it wasn't really in line with, say, fixed asset investment, which was not so positive. So mixed signals on the PMI lately. I find it not as informative as it used to be, very frankly. And I think that what is really important here is industrial production, because what we do not want to see, same as exports, is too much production coming from China, because the U.S. is watching and Trump is watching, both too much production and too many exports going ahead. So PMI, in a way, it's just, okay, let's look at it, but it's not crucial.
How about more broadly around the struggles around property, consumption as well? When do you see China sort of emerging from this funk? And I guess that's connected to your point a little bit earlier about China having motivation to seek a quick fix to this trade issue.
Yeah, I think this time around, Trump is watching, in the sense that it's not going to be enough to just, import. Yes, it might be enough for February 1st. A few imports here and there. Trump will be pleased, but to really make it to, say, Trump's trip, official visit to China, and really come up with more of a great bargain, not just a quick fix, as I mentioned. I think we need to see measures to support domestic consumption in China. And whether China will be ready to do this is, of course, always the big question mark. But I think that's where China should be heading. I would say that it is particularly worrisome to see more fixed asset investment in green tech. If I were China, I would try to avoid that. Move to something which is not tradable, such as, green infrastructure, the grid, you name it, things that do not really impinge on this potentially quick deal with the US, and basically reducing exports more structurally. For that, you need more fixed asset investment in things that China needs. The grid is a good example. And also, of course, real support for consumption. We've seen so far, a few vouchers for I don't know, washing machines, you name it. Yeah, that's not going to make it. We need some structural reform here for China to consume more, and that's what Trump will be watching.
I just want to move to Japan as well before we let you go, because of course, we did have the BOJ tighten on Friday. That was widely expected as well. But when do you see the next move from the Bank of Japan, and what's the ceiling for rates in Japan?
Yeah, so we only have one more hike, 25 BPs more. There's a big reason for this. I think we just need to realize what Japan's potential growth really is. It's very low, maybe 0.5%, certainly less than 1%. We also can imagine that long-term rates can't be above 1% structurally because of the weakness of the Japanese economy. And therefore, I think you can't really expect too many hikes from the BOJ. Now, this means that the yen would have to move further towards more appreciation within this realm of one more cut only. And that's really what we need to watch. There's one more thing to watch, which is BOJ purchases of JGB. So how more rapidly we're not yet even starting to see a reduction in the balance sheet, but at least the accumulation of additional purchases being slowed down more than we have seen so far. So can the BOJ do that without a major volatility in the JGB market? I think that's the key. Can they do this nicely? And it doesn't depend on them only. It depends on the Fed as well. I think the more hesitant the Fed is to cut, the harder it becomes for the BOJ, because there's no room offered by the Fed by lowering rates. So that's why the BOJ has to move, and hopefully 25 BPs will make it, but maybe not. If the Fed doesn't move, the BOJ has to do more. That's kind of the deal here.
All right, Alicia Garcia-Herrero, Chief Asia-Pacific Economist at Natixis CIB. Thanks, as always, for joining us. We've got more ahead on the Asia trade. This is Bloomberg. Just get you across an alert on the Bloomberg at the moment. We've been hearing from the White House today, President Trump saying he's going to order the establishment of a council to assess FEMA, so the Federal Emergency Management Agency. He says FEMA requires a full-scale review, so he's ordering the establishment of a council to do that job. He's also threatened to withhold federal aid to California unless the state changes its water management policies and also approves voter identification laws. He was asked at the same press conference as well if he would consider no tariffs on building materials for the next 3 years to help with reconstruction efforts in California. And he answered, "We'll take a look at that." All right, we've got more to come on the Asia trades as we receive that news that Trump is seeking more funding for FEMA and ordering the establishment of a council to assess that body. This is Bloomberg. Let's get to some of the other stories that we're following. U.S. Secretary of State Marco Rubio has expressed concern about Beijing's coercive behavior against Taiwan and aggression in the South China Sea. The comments come after his first formal call with Chinese Foreign Minister Wang Yi. Rubio also emphasized the new U.S. administration would pursue a relationship with China that advances U.S. interests. The CIA now believes it's more likely the COVID virus originated from a lab leak rather than a natural source. The new view aligns the CIA with the FBI and the Department of Energy, which say the virus probably leaked from a lab in Wuhan, China. The announcement comes after new CIA Director John Ratcliffe declassified existing information. Pete Hegseth has been confirmed as the next US Secretary of Defense, despite allegations of spousal abuse, excessive drinking and financial mismanagement, which he denies. Hegseth is a combat veteran and a former Fox News commentator. Lawmakers voted 51-50 to back him, Vice President J.D. Vance casting the tie-breaking vote. Yonhap News says South Korean prosecutors have charged President Yoon Suk-yeol with insurrection for his attempt to impose martial law last month. Yoon is the first sitting president to be charged while in office and can be detained for up to 6 months while his case is reviewed. The indictment comes just before Yoon was due to be released from detention on Monday. Right, let's take a look at how markets are tracking in the Asia Pacific. No trade in Australia today. We are observing the Australia Day national holiday, which was in fact yesterday, but we all got a day off today instead. We've got New Zealand up and running though, trading a little bit softer at the moment, off by about 0.5%. Looking ahead to the open in Japan, futures pointing higher there. There's going to be no trade in Korea either though, because of the Lunar New Year holiday. No trade in Taiwan or Vietnam either for the same reason. In fact, it's going to be a shortened week for a lot of Asian markets due to Lunar New Year. S&P futures, though, are indeed trading, currently a little bit risk-off, down about 0.5%. Well, the magnificent 7 tech giants are going to start reporting earnings this week. The results may disappoint investors' high expectations. Profit growth is expected to be the slowest in almost 2 years. Bloomberg News earnings specialist Raina Sasaki joins us now with more. So, Raina, what are some of the common themes that are facing big tech? And let's start with Tesla. What are we expecting there?
Yes, so 4 of so-called Magnificent Seven will report slower quarterly sales, and their profit growth is projected to come at the slowest in almost 2 years. Tesla's growth margin likely came in below consensus due to weaker vehicles pricing and adverse effects from a stronger dollar. Vehicle sales are seen rising 16% this year, thanks to the launch of the low-cost Model Y SUV, which start deliveries in March. Investors are watching out for the possible impact of the anticipated rollback of U.S. policies that favor EV adoption.
So we're also going to hear from Microsoft, Meta, Apple as well. What can we anticipate from their results?
Yes. On Wednesday, Microsoft and Meta are expected to post its slowest revenue growth in a year and a half. And for Microsoft, growth in IT spending was likely to be offset by the currency headwinds, while Meta's revenue growth was supported by the higher advertising pricing and an engagement. Recent job cuts at Meta should help the company to maintain its adjusted operating margin about 40% this year. Apple, which reports on Wednesday, may miss its revenue target for its first quarter results. And the outlook for the quarter ahead likely disappoint with sluggish consumer electronics markets, and China's latest smartphone trading subsidy won't likely help the company, as most iPhones don't qualify for the program.
All right, Bloomberg News earnings specialist Raina Sasaki there. Let's get the latest now from the corporate front. Meta CEO Mark Zuckerberg says the company plans to invest up to $65 billion on AI-related projects this year. And this includes building a massive data center and increasing hiring in AI teams. The decision comes days after OpenAI, SoftBank and Oracle announced a multi-billion-dollar joint venture to build data centers and AI infrastructure in the US. Nissan may slow a planned ramp-up of US-made electric vehicles on uncertainty around President Trump's energy and trade policies. The company says production plans in Mississippi will depend on whether the $7,500 tax credit for EVs is scrapped. A Japanese media report at the weekend said Nissan is planning up to 2,000 job cuts in the US this year. China is aiming to stabilize automobile consumption by potentially relaxing purchase restrictions. The Ministry of Commerce says the goal is to encourage people to buy new energy vehicles and facilitate turnover by making it easier to register used cars. This comes after China renewed a trade-in subsidy for fuel-efficient vehicles to boost sales of EVs and hybrids. We have more ahead on the Asia trade. This is Bloomberg. Suntory CEO Takeshi Niinami says Japan should crack down on a weak yen that's hurting consumers. He spoke exclusively to us in Davos after the Bank of Japan raised its key rate on Friday to the highest level in 18 years.
I think 155 is now, but I think below 150 or something, but not a dramatic increase of the value of yen. That's not expected by the business leaders in Japan. The reason is definitely Fed. Fed doesn't cut the rates.
Yeah.
So, and the drawbacks of increase of interest rates in Japan will be coming, such as housing loans, and so we have to fix those drawbacks gradually, such as SMEs will be affected, but definitely increase of interest rates will benefit the Japanese economy.
Yeah. There are reports that the Prime Minister Shiba is actually going to pay a visit to President Trump in the U.S. at the beginning of next month. Do you worry at all about some of the geopolitical issues that are rising, say, with the case of Nippon Steel and the fact that the U.S. administration have been quite resistant to having a Japanese company take over an American company? I know you can't comment on specifically that company, but just from a geopolitical perspective.
I don't think so, because the deal of the Nippon Steel and the U.S. Steel is not based on economic security. It's totally politics. That's our understanding. And we will keep investing to the United States. We mean Japan, because the U.S. economy will be still very good and the best in the world. Only the key country for us to enjoy the benefits by investing investments. So our posture to the U.S. will be intact. So. Nippon Steel deal doesn't bother for us to make a decision whether if we go to U.S. or not. Though I regret that President Biden decided not to go for it, but definitely we will be in the United States and we will keep investing to the United States.
Where are your biggest growth markets right now?
U.S.
It is still the U.S.?
Yes,
okay.
Definitely.
What signals are you seeing from China?
The consumption is waning further, so the confidence of the consumers is very weak. So China must get rid of the issue of real estate ASAP.
Yeah.
Because we Japan experienced the same thing, but the magnitude is totally much bigger in China. So China needs to fix the real estate ASAP.
Yeah. And the domestic environment, obviously, there is a coalition government. How do you see the government policies impacting the outlook for businesses as well? They're obviously looking to pursue a slightly looser fiscal policy.
Well, I think Japan is facing a tipping point, and the government should encourage more labor mobility, because we are suffering from the huge labor shortage. So mobility of labor is the key thing to pick up economic outlook.
That's Suntory Holdings CEO Takeshi Niinami speaking exclusively with our colleague Jumana Beseche from the World Economic Forum in Davos. Let's take a look at how Japanese markets are positioned ahead of the open at the top of the hour. We did see the yen strengthen a little bit after that decision on Friday from the Bank of Japan, 0.5%. We've now got rates at the highest in 17 years in Japan. Nikkei futures, meanwhile, tilted a little bit to the upside, better by about 0.5%. Of course, we are now looking ahead to the Fed decision. The Fed expected to leave rates unchanged this week, however. Well, let's get some more perspective on the Japanese economy and the Bank of Japan's latest hike. My co-anchor Shery standing by with our next guest. Shery.
Yeah, Paul, you mentioned the Japanese yen slightly stronger against the U.S. dollar, but that's the thing, right? We didn't see that market mayhem that we saw back in the last rate hike in July. Joining us now is Sayuri Shirai, professor of economics at Keio University. She was previously on the board of the BOJ. Sayuri, always good to see you with us, especially as we dissect what the BOJ did. What do you think?
There was no surprise, because this time, Deputy Governor already mentioned about possibility of raising interest rate. but they could do it in December. So it was there is no strong reason why they do it January. Also, the reason why they did the rate hike, it was not very clear, because they said they adjusted their forecast on the inflation upward, mainly because of yen's depreciation in the rise in grain prices, And then governor said it's cost push, right? And then, and it's not really clear why they do that. Yeah.
That's really interesting, because the reaction from the market has been much more calm, because they clearly choreographed this decision as opposed to what happened back in July. But you're still not very satisfied with the communication technique, especially what's behind these rate hikes now.
Yeah. So BOJ, I think it's not very honest about why they are raising interest rates. So that's why people are really confused. A lot of people who are there, press people at the press conference probably didn't really get it, what they're doing. So in the meanwhile, the governor says this is cost push, yen's depreciation, rice price, etc. And they say underlying inflation is picking up. But to me, I look at various data, but I don't really see a sign that underlying inflation is picking up.
When we talk about underlying inflation, are we talking excluding fresh foods, excluding energy? What are we thinking in terms of service inflation as well?
Yeah, that is confusing thing. The Bank of Japan already look at the inflation excluding fresh food or excluding fresh food and energy, right? But they include most of food prices. So that's why inflation is exaggerated. Like the U.S. and many other countries, when we talk about core, actually excluding all food and energy, then it's just 1.6%. And there's no sign of picking up. And also services inflation is 1.6%. So to me, it's already below 2%, right? It's not underlying, it's strengthening, but they are saying underlying inflation is picking up. So that's, I think, confused me and a lot of people.
Sayuri, do you think consumers are perhaps a little bit confused as well? Because it's been a long time since Japanese consumers have had to deal with inflation of any sort at all. Do you think there's a bit of a risk to consumer sentiment going ahead as the BOJ tightens?
Yes, because food prices are very high, above 3%, and then a lot of people feel this is raising living cost and daily cost push. But the Bank of Japan saying, economic and inflation outlook is improving. The likelihood of achieving their outlook is actually strengthening. So it's very different from what people feel. People feel real consumptions are stagnant, and production, industrial production, export are stagnant, and then, domestic demand is really weak. So there is a huge gap between what people really feel and what the governor and Bank of Japan is explaining in the statement.
Yeah, and a number of smaller companies, I understand, are struggling as well with some of these import prices due to a very weak yen. Can you unpack some of the difficulties there?
Yes. So large company, they can handle it because they can get a profit from yen's depreciation. Small, medium enterprises, they have to, cope with this rising input cost. And a lot of companies are really suffering also because of labor shortage. Simply, we do not have young workers. And they are kind of forced to raise wages. And but the BOJ is saying there is a virtuous cycle between wage and prices. But a lot of people say they have to raise wages because simply there is no people there. And then because our living costs are getting higher, so they have to compensate for it. So I think explanation that the BOJ is providing, there's a virtuous cycle between wage and prices, and what actually people feel is very different.
And you're thinking that perhaps they should just be honest and just address the impact on the yen, the impact of the yen on pricing and just broader inflation. But what about the BOJ's mandate itself? Is that why they cannot make that clear link?
Well, but at this moment, inflations are mainly coming from yen's depreciation, right? And then this is unwanted yen's depreciation. And then,
They sort of made a connection last time with inflation being more sensitive to exchange rate, right?
But I think, this time they can be more specific, and probably they can influence through communications. Because, usually G20, they want to avoid competitive depreciation, right? But what we are facing is not the competitive depreciation. It's too much depreciation. We want to change. We want to appreciate it. So it's totally different from, the global setting, right? So I think, BOJ can be more explicit, and this is unwanted inflation.
You talked about how companies have been forced to raise wages. We just heard from Suntory Suntory CEO
Yes.
Niinami-san, who wants to raise wages about 7%, I think, for this year as well. Despite the fact that they're forced, if they're forced to do it, wouldn't that eventually create that virtuous cycle that you want to see?
How to say because see, we have a declining population, and then rural area, a lot of companies are already exiting because there is no the president who can take over the small medium companies. So what will happen is that if there will be a labor shortage and then they have to raise wages, many companies will go bankrupt. I mean, I'm not sure if that is good. I know some people, like Niinami-san also mentioned, maybe it's good for Japan to restructure the economy, but everything is concentrated in Tokyo, and then maybe it might accelerate hollowing out, right? Many companies just on the verge of surviving. So I have to be a bit careful about that. But the simple fact is that the all cost push, wage hike, yen depreciation, it all leads to the cost push inflations.
I've heard about these challenges, especially for smaller businesses that don't have people to hire. And when they hire people, it's so expensive right now. Couple that with the potential of global tariffs, perhaps not direct tariffs on Japan, given the Japan-US relationship, but broader tariffs globally. How would that really factor into the equation for the Japanese economy?
Yes, so if Mr. Trump is going to raise tariffs against Mexico, Canada, or
Colombia already 25%.
Yes, it means globally it will be more inflationary. It means Japan will have more cost push inflation, more persistent. So which means it's not really, favorable inflation. So BOJ probably have to, continue to raise interest rate. So that is a difficult part.
Interesting that the BOJ mentioned how markets had been relatively calm, and of course, leading up to the decision, we had heard from sources that if there are no huge negative surprises from the Trump administration, that this rate hike would go on. It seems that they sort of caught right that 1 week before we actually saw these tariffs in place for other countries. How does the BOJ balance that? Because with this incoming U.S. administration or already in place U.S. administration, we know that everything is so unpredictable. When you don't know where Trump is going, what that will mean for the Federal Reserve, and what that will mean for the Japanese yen, how do you calibrate the pace of your tightening so you can time that properly?
Yeah, that's a very difficult part because it looks like a U.S. will be very inflationary, right? So Fed may not be able to lower interest rate, maybe at most just one, and maybe no interest cut. Then our interest rate differential is so huge. Then we may have a more depreciation pressure on Japanese yen. So here is a dilemma that BOJ probably have to continue to say they are ready to raise interest rate. But this is a lot of people feel it's maybe have a contractionary impact on the Japanese economy. So there is a huge trade-off.
Sayuri, we didn't even get to domestic politics. We do have the upper house elections to contend in here in July, but Sayuri Shirai will have you back in order to dissect everything else that's going on right now with the Japanese economy. She's professor of economics at Keio University. We have plenty more to come with Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Well, investors are watching the impacts and risks surrounding President Trump's policies after his sudden move to impose tariffs and sanctions on Colombia. Bloomberg's executive editor for Asian markets, Paul Dobson, joins us now for more. Paul, this kind of came out of left field. President Petro of Colombia rejecting 2 military plane loads full of deportees, but it seems that it's the optics of using military aircraft which are the problem here. Could this be easily resolved, or is this a taste of what's to come?
A little bit of both, I think there, Paul. Yes, it could be easily resolved because Colombia, as already said, we could send different jets to pick up these people. They shouldn't be treated, like criminals in the military, playing with the shackles on and things like that. Not very happy about it, but I think what Trump has been doing here is making an example of a relatively soft target to show everybody that he really is serious about the deportation and about the tariffs that are still hanging over markets. And that's why we've seen a pretty negative reaction both in US equity index futures today and across FX as well. Last week we got lulled into this false sense of security that maybe Trump was going to be playing Mr. Nice Guy for a while. Now we've seen his teeth a little bit and it's rattled people. We saw Goldman Sachs, for example, had said the market priced out 2/3 of the risk premium on tariffs for the euro last week. So investors will be starting to think, hang on, did we go too far too fast in getting comfortable here?
Yeah, interesting that you mentioned the euro there because, Colombia is a US ally. Most of Europe is also a US ally. Is there a risk here that if you're seen interfering with America first, you're certainly going to get Trump back and maybe some bite as well?
Yeah, absolutely. So he's being very clear here with the policies and with that order. And I think that nobody is immune from it, although investors have been scouring the markets to find out, or figure out where they might be able to find opportunities that are a little bit more shielded from that ire. And I think, kind of ASEAN is one area where people are looking and thinking, is that going to be able to skirt the sort of balance between being friendly with China or also being friendly with the US. But on the flip side of that, even Canada, Mexico, proximate countries to the US, let alone Europe and certainly China, are under the constant threat now, the sword of Damocles hanging over them from the potential that Trump turns his focus their way and starts to talk more loudly and vociferously about those sanction threats.
All right. Our executive editor for Asian markets there, Paul Dobson. Stay with us. We've got the market open in Tokyo next. Not Seoul, though. It is a public holiday in Korea for the Lunar New Year. Japan open in a moment. Stay with us. This is Bloomberg.
This is the Asia Trade. We're counting down to the open in Tokyo with South Korea closed on holidays. Paul, of course, will be watching the market reaction in Japanese assets to the Governor Ueda's commentary in the presser on Friday after the BOJ hiked rates, but also to the tariffs imposed by President Trump on Colombia, 25% on those goods. Important because it will also give us an indication on how his tariff policy might unfold for the rest of his term.
Yeah, just when you thought the tariff story had gone quiet, it hasn't. It's going to be a disruptive week across much of Asia because of the Lunar New Year holiday. You mentioned Korea off today. Well, China will go off later in the week and a number of other markets as well. But of course, we've got a Fed decision to look forward to as well, Shery.
Do we have the FOMC as well this week? It's going to be packed, really, because we're still digesting the first week of President Trump's presidency. But also at the same time, we do have a lot of not only the FOMC rate decision, but tons of economic data out of Japan as well, including the jobless rate and consumer confidence. You can see the Nikkei now coming back online, up 0.5%, while the Japanese yen is holding steady, a little bit stronger after that BOJ rate hike decision. But of course, what we'll be watching is for the continuation of a BOJ tightening for the rest of the year and the pace of acceleration in that tightening drive. At a time when really global uncertainty is very high, we have seen the US dollar rebounding slightly, Paul, given, of course, the news of the tariffs on Colombia.
Well, we've got US debt now trading in Tokyo as well. We've seen yields quietly grinding lower, and that's a trend we're seeing continuing in the first few minutes of trade in Tokyo as well. The spread between the 2s, 10s has widened a little bit as well. It's retraced a bit since last week. This tariff story, well, we thought it wasn't as aggressive as expected, but we'll get into the Colombia story in a moment. We also had the Treasury Secretary nominee Scott Bessent's hearing. He had a very strong focus on deficit reduction, so that's having an impact on the bond market as well. Shery.
Yeah, let's get more on the markets with Nancy Davis, founder, managing partner, and CIO of Quadratic Capital Management. Nancy, good to have you with us. As Paul was telling us, yields are quietly grinding lower, but it's been a relatively quiet corner of the market given President Trump's inauguration. What will you be watching in this space?
Well, definitely Powell has moved the needle in terms of January 2024 versus January 2025. We couldn't be further apart. If you recall, going into 2024 in January, the market had priced in 6 cuts from the Fed. Now, Powell has really moved the needle. All those rate cut expectations, they didn't materialize in 2024. And the number of cuts that are priced into 2025 are less than 2 all year. So I think there's a lot of upside actually with the expectations because they're so low. And I think at Davos, also a huge topic was inflation. And inflation is something that every central bank is fighting around the entire globe. It's not just a US problem.
So how should investors position, especially when it comes to Treasuries, inflation-protected securities like TIPS?
So TIPS have not been this cheap in about a decade. And that's because the market expectations do not expect inflation to be a problem in the future. So real yields are extremely positive, very high, above 2%. So I think inflation-protected bonds are actually a great investment opportunity for all investors. Like, who loves to spend money more than Americans, right? It's a great place. And then the break evens, they're so low in the US, the 10-year is 2.4, and you compare that to other markets around the world, CPIs are well above 3 in Europe, even Japan has a above 3 CPI. So I think inflation, people should be looking at the US as a real value play to buy inflation assets.
We're going to have a lot of reporting this week from the big oil majors, some of the big tech names reporting as well, Microsoft, Meta, Tesla, Apple. Do you feel like there might be a little bit of a risk of a downside surprise here, particularly when it comes to return on investment on all the AI spending we've seen?
Yeah, definitely the U.S. equity market has been really hitting new highs since the election. Things are pretty expensive generally in terms of multiples. And I think, there is a potential where there's a lot of euphoria going into equity markets, whereas you look at other markets, who would have thought that the Fed would have cut rates last year and 10-year yields would have moved 100 basis points higher, right? So there's actually a really, I think, good value right now in the Treasury market specifically. I think the yield curve is really a good value. Last year, the market had priced in, you can see on your Bloomberg terminal, that the yield curve would steepen in the future. Now, all that steepening has been taken out of market expectations. The curve in the forward space is priced completely flat in, say, you look at the US 2s, 10s, going out across the curve. So 1 year, 2 year, 3 year, 4 year, all the way out to 5 year, it's priced between 8 and 9 basis points. Whereas you look at the Japan market, the JGB market is about 50 basis points positive.
In terms of expectations for the Fed, we're not expecting any change this week, but the market did seem to overprice easing in 2024. Do you think it's happening again in 2025?
Well, very little, as you can see on your Bloomberg terminal, is priced in. We have less than 2 cuts priced in for all of 2025. And when the Fed started cutting rates last year in September, remember we had that 50 basis point, kind of a double in the first hit. The market was really expecting another 150 basis points of cuts this year in 2025. So that's been really wiped out over the last couple months. So I think there's actually a lot of upside for the Fed to actually surprise the market with more cuts potentially, especially if we have weakening numbers and jobs.
You had some recommendations around TIPS, the bond space as well. Is that code for expected volatility in 2025?
I think it's very surprising to a lot of people because U.S. interest rate volatility, specifically in our space at Quadratic, it fell over 25% in 2024. And it's kind of a wild, the fundamentals do not really match the market. There's a huge divide. And so interest rate volatility is actually a really attractive thing, in my opinion, to purchase, to be long, and to buy options is a way to get exposure to long volatility.
Which assets do you feel like are looking the most prone to extreme moves in the coming weeks and months?
I definitely think the rates market is, because the spread between implied and realized volatility is so tight. It hasn't been this low since 2020. I think it's really posed to move quite substantially. And I think that's the nice thing about owning volatility as an asset class. It doesn't really matter the level of rates, whether rates are going higher or lower. It's not a bet on the level, but it's more a bet just that the market's going to move one way or another.
All right, Nancy Davis of Quadratic Capital Management, thanks so much for joining us with your views. I just got an alert on the Bloomberg terminal that people who enjoy remote work might be interested in. New Zealand intends to ease visa rules for digital nomads, so New Zealand's going to relax those visa requirements, which would allow tourists to engage in more remote work. Interesting policy, considering the Foreign Minister, Winston Peters, has previously had a very staunch view on cutting immigration to the bone. But here we go, New Zealand to relax visa requirements, allowing tourists to perform remote work. Still to come on the Asia trade, President Trump ends a Biden administration hold on supplying 2,000-pound bombs to Israel, even as ceasefires hold in Gaza and Lebanon. We've got more details next. This is Bloomberg.
Take a look at how currencies are trading at the moment. We are seeing some of those safe haven currencies gaining ground and being supported by the fact that we're seeing more uncertainty around trade policies coming from the Trump 2.0 administration. We're talking about the Japanese yen also reversing some of those earlier losses to gain 0.1%. Of course, we're also reacting to the Bank of Japan's policy decision to hike rates to the highest in 17 years. So we're headed towards that 155 level. The Aussie under pressure right now. Of course, it also acts sort of a proxy against China and its challenges, as we're also watching broadly how the sanctions and tariffs from the Trump administration could affect Asia as well. But right now, it's all about Colombian assets set for a rout after President Trump said he's implementing tariffs and sanctions on the South American nation for refusing to take back deported immigrants. For more, let's bring in Bloomberg reporter Andrea Jaramillo. And Andrea, of course, we're watching this very closely just because it could give us an indication of what the tariff policy and the actions will look like for other countries as well. But Colombia was the first to take it. I mean, we've seen threats about Mexico and Canada, but 25% on Colombian goods. How significant will the impact be?
Well, as you say, we were expecting this for Mexico, Canada. We weren't really seeing this coming for Colombia. Of course, we did expect some strain in the relationship between Gustavo Petro, which is Colombia's first leftist leader, and of course the Trump administration. Colombia's exports, around close to 30%, are to the U.S. So yes, this could have a big impact, and we're already expecting this tomorrow. This is Sunday evening here in Colombia, and we're expecting impacts across all assets in Colombia as the market opens Monday morning for Colombia.
Andrea, is there the potential, though, to defuse this as quickly as it escalated? Because it appears to be a disagreement over how these deportees arrive in Colombia. The President Petro was not happy with the optics of military aircraft and has offered the presidential plane. Is there a pretty obvious off-ramp here?
Yes, it could happen. I mean, as we speak, the Colombian government, there's going to be a statement from the Colombian government. It hasn't started, so it could happen. I mean, we're getting calls across the board from like company leaders, just everyone saying, please in Colombia saying, please, let's talk about this, serenity, calm. So there could be a change. I mean, we're watching as we speak. We're waiting to see what the government will say.
What's interesting about the Colombian-U.S. relationship is that not only has it remained pretty amicable for the past couple of decades, but also the fact that the U.S. is Colombia's largest trading partner, as you said, a lot of those exports going to the U.S., as opposed to many other South American nations that rely more heavily on China, right? What could be the geopolitical ramifications long-term for this dynamic?
Right. So Colombia has always been a very there's been a strong relationship with the U.S. It has always been its strongest ally. And as you say, I mean, for example, China doesn't have such a strong trade relationship with Colombia as it does with many other countries in Latin America. So if this continues to escalate, this is something that has consequences, and this could lead Colombia to start shifting more towards China, where it doesn't really have that relationship right now, like other countries in the region.
Especially given that now you have a leftist government with Gustavo Petro, right? What does this mean for the president himself in the country?
I mean, Gustavo Petro, last week, the government is in crisis. There's a strong, close to the border with Venezuela. There's been security problems. There's been, just last week, there was a lot of noise regarding displaced people because of the violence. So the government is not in a strong position right now. And it's more than a year away, but presidential elections in Colombia will happen in 2026. So this is something that is also evolving, and this is something that we're seeing a fight in social media, and this could also happen and impact Gustavo Petro's. He can't be reelected, but his party's given the backlash and just like everyone coming out to say like what is happening, at least a lot of companies, etc., this might impact and hurt him, his party in the elections. We're already starting to talk about elections. It's in more than a year away, but it's already been, there's already people coming out to say they want to be candidates. So this could have an impact on the government as well.
All right, Bloomberg reporter Andrea Jaramillo there. Other stories that we're following: U.S. Secretary of State Marco Rubio has expressed concern about Beijing's coercive behavior against Taiwan and aggression in the South China Sea. The comments come after his first formal call with Chinese Foreign Minister Wang Yi. Rubio also emphasized the new U.S. administration will pursue a relationship with China that advances U.S. interests. Pete Hegseth has been confirmed as the next U.S. Secretary of Defense, despite allegations of spousal abuse, excessive drinking, and financial mismanagement, all of which he denies. Hegseth is a combat veteran and a former Fox News commentator. Lawmakers voted 51-50 to back him. Vice President J.D. Vance casting the tie-breaking vote. The CIA now believes it's more likely the COVID virus originated from a lab leak rather than a natural source. The new view aligns with the CIA, with the FBI and the Department of Energy, which say the virus probably leaked from a lab in Wuhan, China. The announcement comes after new CIA Director John Ratcliffe declassified existing information. President Trump has floated the possibility of having Jordan and Egypt take in Palestinian refugees. That was an idea quickly rejected in the region. Egypt says it stands against displacing Palestinians temporarily or permanently, and that such a move may aggravate the regional conflict. Jordan and the Palestinian Authority in the West Bank also rejected the idea. Shery.
Paul, take a look at how futures are trading in Europe. We're seeing downside pressure already. European stocks were lower last week. We're seeing some negative impacts because of losses in the telecommunications sector. But of course, now we're contending also with tariff news coming from the Trump administration against the Colombian nation in South America. Right now, we are, of course, also watching ahead for that ECB policy decision where a rate cut is expected. Not to mention, of course, we do have the FOMC policy decision as well. We have more ahead on the Asia trade. This is Bloomberg.
Inflation can hit us again, but I would also say if you look at where the bond market was even a year and a half ago, when we were experiencing very elevated inflation, we had a very inverted yield curve. The short rates were higher than the long rates. What we are seeing now is the normalizing of the yield curve, but I also believe we're going to have a much more steeper yield curve. And that's a function of forward inflation expectations.
Most of the body of the genie is in the bottle.
Kind of getting stuck there, though.
But the legs are kind of hanging still out. We need to push it all the way down.
IMF Managing Director Kristalina Georgieva and also BlackRock CEO Larry Fink discussing efforts by central banks to tame inflation. And of course, we have a big central bank decision this week too. In fact, one from the Fed, one from the ECB as well. The Fed widely expected to remain on hold. S&P futures a little bit softer at the moment, offered by about 0.5%. It was a pretty good week for markets in the US last week. We're going to hear from a number of big tech firms this week, as well as some big oil firms as well. Nasdaq futures a bit softer also by about 1.2%. Shery.
And Paul, Korea away on holidays today, but Yonhap news agency now reporting that impeached South Korean President Yoon Suk-yeol has been indicted on charges of insurrection. It means Yoon could be held in detention for as long as 6 months as authorities build a case against him. East Asia government editor John Herskovitz joins us here with more on this, and pretty historic because it's never happened to a South Korean sitting president.
Exactly. We haven't seen a president being indicted. There are only two charges for which a sitting president can face criminal charges. One is insurrection, the other is treason. And this has happened for the first time. So this means, as you said, 6 months more detention. He was being held under an arrest warrant. A judge didn't renew it, and this sped up the process towards the indictment. So two things going on. We have the constitutional case for the ordering of martial law with the impeachment, and we have a criminal case. So both of these are going ahead now, and Yoon is facing absolutely unprecedented punishment, legal matters that has never happened before for a sitting president in South Korea.
Of course, he surprised everyone by declaring that surprise martial law. But when it comes to the Constitutional Court, tell us a little bit about what the process is here and what could come next.
Well, the process usually takes about 3 months. From the time of the impeachment was voted on by Parliament, the court has to rule within 6 months. There have been impeachments before. Court usually takes about 3 months to do these. If the court decides that the impeachment as voted on by Parliament is lawful, Yoon is removed from office, and that sets up the terms for a new presidential election. So this would be the Constitutional Court one, is for removal from office or not. The other one, the indictment for the insurrection, is a criminal matter, which could land Yoon in prison.
John, it took a while to arrest President Yoon, in part because of the huge crowd of supporters outside of his residence. So he still does enjoy a lot of support among the population. What's the risk of civil unrest as this pushes ahead?
Well, you're going to see protests in favor of Yoon and against Yoon. It's just such a contentious issue right now. Yoon has his supporters, they're ardent supporters, they're there for him, and they're also detractors, which are quite large in number. Public opinion shows that people want the impeachment to go forward. They are supportive of the criminal charges, but there is this very steadfast support for Yoon. He has significant amounts of people who will turn out for him and show that they are ready to block or interfere with things that are going on in terms of putting people on the ground.
It was really interesting to see them get together almost every day in Gwanghwamun to really support the president. But of course, when we have civil unrest in South Korea, North Korea loves to take advantage of that. With President Trump now being, again, open to conversations with Kim Jong-un, how does this set up the country in the South, the Seoul government, to be able to deal with these geopolitical challenges?
Well, it means that Seoul's role as an intermediary between North and South Korea is incredibly compromised, because who is leading, who will stand between the two? And Trump, for the latter part of his administration, tried to make South Korea a smaller player in the process. For North Korea, the going ahead with the meeting with Trump, I think Kim would like to do this for the prestige, but they've given very clear signals that they're not as interested in bargaining as they were before. They see the U.S. as maintaining a hostile policy under Trump. There's no reason to make concessions. And Kim Jong-un is much stronger now with his nuclear arsenal than he was when he first started meeting with Trump. There's far less to give away.
Not to mention that, as you said, the landscape has changed. I mean, North Korea has a cozier relationship with Russia as well.
Exactly. The Russian support has been enormous for North Korea's economy. According to reports from groups that keep an eye on matters, prices have stabilized. You see in North Korea that there's factory construction going on. Housing is just booming. So Kim is seeing stability that he's never seen before, and Russian aid has been a really significant factor in keeping him in power.
All right, Bloomberg East Asia Government Editor John Herskovitz there. Let's take a look at how FX markets are tracking at the moment. We did see the yen strengthening a little bit following the Bank of Japan's decision to increase rates on Friday. That was widely anticipated, so a lot of that move priced in, 155.53 right now. Ongoing softness for the yuan, however, the most bearish analysis on the Chinese currency sees it at 7.75 against the greenback this year. The euro also weakening ahead of the ECB rate decision this week. We're expecting to see a 25 basis point cut there. More ahead on the Asia trade. This is Bloomberg. We're set to get China's January PMIs later on Monday. Bloomberg Economics sees the official survey showing soft momentum in the manufacturing sector carrying into early 2025, as of course production does start to wind down ahead of the Lunar New Year. Services, in contrast, may get a boost from holiday-related travel. Bloomberg's Avril Hong joins us now for more. Avril, what are we expecting from these PMIs?
Yeah, so just as you said, right, manufacturing expected to show a bit of cooling based on the activity indicators, while when you look at services, there might be a bit of a pickup, and this is all to do with the Lunar New Year holiday, 8 days of it that's going to be starting from tomorrow. So manufacturing is expected to cool to 49.7. That will be contraction, the first we've seen since September. On non-manufacturing, it's likely to have picked up to 52.6, supported by the services sub-index. If you look at manufacturing, this soft momentum at the end of last year is expected to have carried into the early parts of this year, and production, which already started to wind down ahead of the Lunar New Year holiday, we're expecting to see a bit more of that weighing on manufacturing. And, for services, although it might be getting a bit of a boost from holiday-related travel, we're watching to see the kind of strengths from transport, tourism related activity, keeping an eye as well on high frequency data that's expected to point to solid sales of home appliances. And of course, this is thanks to the expanded trade-in program. Just a caveat here on the data, keep in mind that some of these seasonal factors around the annual holiday do tend to add volatility to the PMIs during the first quarter. So keep that in mind even as we digest the data coming out in the next hour.
But still, the broader point is now that the Chinese economy is so stagnant that the government couldn't spend as much as they wanted on the economy. What's this about?
Absolutely. I mean, you look at the total augmented spending at around $5.3 trillion for the year. This misses the mark of about 5% that was set from the budget in March. So it just goes to show you how governments, pretty much at all levels, they're unable to hit the target when it comes to spending. When you look at local governments, I think that was the key pain point because they've really been coming under pressure. There have been tighter restrictions from Beijing to rein in debt risk. You think about how their sales revenue from land, that has also been plunging. So they've been strapped for cash. They've been unable to meet some of these funding commitments. And why this is such a big problem is how public spending is seen as a key part of the equation as private demand as well as investments languish. You look at villages, townships, cities, they've all been struggling to hit their budgeted spending, struggling to pay wages as well. So that's kind of undercutting support for the economy. The latest numbers just add to signs that fiscal policy has failed to provide enough of a boost and that more needs to be done, guys.
We'll go to Avril Hong there with the latest on China. Take a look at how Japanese assets are trading right now, reacting to that Bank of Japan policy decision on Friday that hiked rates to the highest since 2008, the global financial crisis. We're seeing the Nikkei gaining 0.2%. Almost every sector in the green right now. Consumer discretionary, healthcare, and consumer staples are leading those gains, although tech companies are under a little bit of pressure. Of course, we have big tech earnings this week to watch out for as the Japanese yen right now holds at that 155 level. Suntory CEO Takeshi Niinami says Japan should crack down on a weak yen that's hurting consumers. Who spoke exclusively to us in Davos after the Bank of Japan hiked rates.
I think 155 is now, but I think below 150 or something, but not the dramatic increase of the value of yen. That's not expected by the business leaders in Japan. The reason is definitely Fed. Fed doesn't cut the rates.
Yeah.
So, and the drawbacks of increase of interest rates in Japan will be coming, such as housing loans. And so we have to fix those drawbacks gradually, such as SMEs will be affected. But definitely increase of interest rates will benefit the Japanese economy.
Yeah. There are reports that the Prime Minister Shiba is actually going to pay a visit to President Trump in the U.S. the beginning of next month. Do you worry at all about some of the geopolitical issues that are rising, say, with the case of Nippon Steel and the fact that the U.S. administration have been quite resistant to having a Japanese company take over an American company? I know you can't comment on specifically that company, but just from a geopolitical perspective.
I don't think so, because the deal of the Nippon Steel and the U.S. Steel is not based on economic security. It's a totally politics. That's our understanding. And we will keep investing to the United States. We mean Japan, because the U.S. economy will be still very good and the best in the world. Only the key country for us to enjoy the benefits by investing investments. So our posture to the U.S. will be intact. So Nippon Steel deal doesn't bother for us to make a decision whether if we go to U.S. or not. Though I regret that President Biden decided not to go for it. But definitely we will be in the United States and we will keep investing to the United States.
Where are your biggest growth markets right now?
U.S.
It is still the U.S.?
Yes,
okay.
Definitely.
What signals are you seeing from China?
The consumption is waning further. So the confidence of the consumers is very weak. So China must get rid of the issue of real estate ASAP.
Yeah.
Because we Japan experienced the same thing, but the magnitude is totally much bigger in China. So China needs to fix the real estate ASAP.
Yeah. And the domestic environment, obviously, there is a coalition government. How do you see the government policies impacting the outlook for businesses as well? They're obviously looking to pursue a slightly looser fiscal policy.
Well, I think Japan is facing a tipping point, and the government should encourage more labor mobility, because we are suffering from the huge labor shortage. So mobility of labor is the key thing to pick up economic outlook.
Suntory CEO Takeshi Niinami speaking exclusively with our colleague Germano Beseche in Davos. Let's take a look at how crypto assets are tracking, because we've had a bit of news on that front. Elon Musk is exploring the use of blockchain technology at the Department of Government Efficiency, better known as DOGE. The intention there will be to reduce costs, increase transparency, and Musk's team has met with the representatives of various public blockchains to evaluate their technology and discuss potential uses. As for the potential use, no one's tried this before. It does remain untested and raises questions about control, security and efficiency. That news notwithstanding, we're seeing a little bit of easing in prices for crypto assets. Bitcoin there off by getting on for 2% at the moment. We have more ahead on the Asia trade. This is Bloomberg.
Hong Kong's commercial real estate sector is going through one of its worst slumps in history. Average prices of office buildings, shopping malls, and other properties have fallen over 40% from their highs in 2018, eroding the value of the collateral that's backing many bank loans. Bloomberg intelligence analyst Patrick Wong joins us now for more on this. Patrick, so what are we expecting the impact to actually be on these banks and property landlords in Hong Kong?
The situation getting worse because of the prices here. We dropped over 40% already, right, since 2018. And then the challenge right now is that for lots of the property owners, they also running out of cash for some of them. So it makes the situation worse because the bank's perspective, they are become more cautious for lending money. Of course, they also cover well protected by the loan-to-value ratio. In the past, it's only 50%. So suppose if the prices drop like 40%, still okay. But basically, in some cases, it's drop more than that. And then another problem is that for lots of owners, they run out of cash, they don't pay the mortgage, and it makes the banks become a difficult situation. So we see some cases that the property owners, they basically they can't keep paying the mortgage and then can't do the refinancing. So that is the bank's perspective getting a challenge to figure out the situation. So at this point, it's getting more and more a challenge this year.
Well, we did see a number of distressed commercial property transactions in Hong Kong. Could we expect to see some more this year?
Yes, I think so, because the market is that the prices, especially like office market, it dropped quite a lot this year already, and we see some distressed assets also happening. So going to later this year, we may also see more and more that kind of situation. The only good thing for us is that potentially we may see the interest rate also coming down a little bit further, so they also support to getting a bit more buyers to support the market.
How much support? What's the outlook for 2025?
In this case, I think for the overall property prices, the office retail, especially for office, we still see a potential challenge. For the rents, we see another like mid to high single digit down for the rents. So that also reflects on the prices as well for the office. And for the retail, I think in Hong Kong, we also see the headwinds from like some shoppers is going to Shenzhen, and also the luxury retail sales is not doing pretty well here. So that is also an impact on the overall retail segment. So that is overall concern for some of the property landlords. So they may also see potential risk to like sell their assets at lower prices.
All right, Bloomberg intelligence analyst Patrick Wong there in Hong Kong. Let's get the latest now from the corporate front. Meta CEO Mark Zuckerberg says the company plans to invest up to $65 billion on AI-related projects this year. And this includes building a massive data center and increasing hiring in AI teams. The decision comes days after OpenAI, SoftBank and Oracle announced a multi-billion-dollar joint venture to build data centers and AI infrastructure in the US. Nissan may slow a planned ramp-up of US-made electric vehicles on uncertainty around President Trump's energy and trade policies. The company says production plans in Mississippi will depend on whether the $7,500 tax credit for EVs is scrapped. A Japanese media report at the weekend said Nissan is planning up to 2,000 job cuts in the US this year. China is aiming to stabilise automobile consumption by potentially relaxing purchase restrictions. The Ministry of Commerce says the goal is to encourage people to buy new energy vehicles and facilitate turnover by making it easier to register used cars. And this comes after China renewed a trade-in subsidy for fuel-efficient vehicles to boost sales of EVs and hybrids. LNG firm Venture Global's US trading debut on Friday was the biggest for the energy sector since 2021, delivering a $58 billion valuation and making its co-founders multi-billionaires. CEO and co-founder Mike Sable told us more about the IPO and its disruptive new LNG terminal model.
We're incredibly pleased with the execution and the outcome of the transaction. We're building assets for the next 100 years, our factories that manufacture liquefied natural gas, and so we're extremely pleased.
You guys are different, like you do it differently. That comes with risk, it comes with opportunity, it comes with costs, like arbitration with some of your customers, et cetera. Do you get a sense that investors felt you were too risky, or do they need more proof of concept?
No, I mean, we achieved a great valuation. We're certainly a high growth business, and we take a very different approach from the incumbents. And our earnings trajectory is, we believe, very steep and going to be very attractive for investors. And so as we continue to turn on our liquefaction trains faster than anybody's ever done before, we just turned on Plaquemines, our second LNG facility on the Mississippi River last month. And as of this morning, we're producing from 11 trains. We're running way ahead of schedule. And our ramp up of earnings from those facilities is much better than we expected.
Give us a sense of how quickly a new one can come online relative to what we've had in the past.
Sure. I would say the average in the world for new facilities is first production coming 6 to 8 years. Trending maybe more towards 8 years than 6 years. Our first two facilities we brought online in 2.5 years. And that's an enormous change in the return on capital and velocity of capital, because when you have a $20 billion facility and you don't make any return for 8 years, you have an enormous earnings hole you have to dig out of, which causes you to leverage the facility and pay it off over 20 years. In our case, we start producing in 2.5 years. We largely pay them off during construction, which then allows you to enjoy earnings from your facilities for 50 or 60 years. And the way we like to describe it is if you picture building a commercial office tower, as we're building from the ground up, we're leasing the floors as we go, because we have more liquefaction trains in our facilities, 36 versus 3 big ones. And by the time we're finished building to the top floor, we've paid off the whole facility.
Venture Global CEO Mike Sable speaking with our colleagues Alex Seal and Romain Bostic. Take a look at how oil is trading at the moment. We're seeing a little bit of risk-off sentiment in trading given President Trump's tariffs and sanctions on Colombia. Colombia is America's 4th biggest source of overseas oil. We're also following iron ore prices. We do have a lot of data coming out of China, including industrial profits, not to mention that we do have also PMI numbers for January, another decline expected for the month of January. Despite the fact that we are seeing that upside for copper hitting a 2-month high, and this, of course, as we didn't get those immediate day one tariffs from President Trump on Beijing. We have more ahead on the Asia trade. This is Bloomberg. We're expecting earnings from the Magnificent Seven, Paul, this week. So we're seeing already a huge tech rally that's amounted to about $15 trillion already. But we're expecting those earnings profits perhaps to start slowing down. We're talking about the growth being at the slowest in almost 2 years, according to analysts. And this, of course, after that $15 trillion rally that I just mentioned on the NASDAQ 100 index since the end of 2022. So the bar is pretty high right now for all of these companies to be able to outperform.
Yeah, that's right. There are lofty expectations in this space indeed, and some of them have spent very heavily on AI investments, and we're waiting to see if they pay off down the track. But in terms of some specifics, the outlook's a little bit clouded for iPhone demand, so that'll be something for Apple to focus on. Tesla vehicle sales up 16%. We're waiting on the news of low-cost models there, but vehicle prices have been softer as well, so that could weigh. We heard from Meta earlier, $65 billion investment in AI data centers. Revenue's seen rising there. Microsoft revenue growth 11%. Well, that's forecast as the slowest expansion in 18 months, so it could be a little bit of a mixed bag. Well, Indian automakers Bajaj Auto, Tata Motors and Maruti Suzuki all set to report earnings this week as well, and the industry is expecting a boost in sales from last quarter's festive season in an otherwise sluggish Indian economy. Let's bring in breaking news earnings specialist Reina Sasaki. So, Reina, it could be a mixed bag out of India as well in terms of earnings. What are you looking out for?
Yes, on Tuesday, Bajaj Auto is reporting its third quarter earnings, and it may be pressured by the slower growth for vehicle sales with lower domestic and export sales compared to a quarter ago. And then on Wednesday, we're expecting Tata Motors to report its lower expense in its third quarter earnings. And then India's automaker recently said that the cost of making an electric car has been declining as the battery became cheaper. And Maruti Suzuki also on Wednesday is expected to announce more EV launches as it aims to become the largest EV maker in India by March 2026. Its third quarter net income is expected to have risen 16%.
We know that the Indian market has been under substantive pressure recently. Of course, we have heard concerns about high valuations already. What are we expecting this earnings season to do for the broader market there?
Yes, so for the India's the auto the makers, so the three companies should find support from the last quarter's festive seasons in otherwise a sluggish the India economy, and the sales of the higher end cars have been driven growth with SUV makers, the Mahindra, and as it expected to post a 20%. The revenue increase in the quarter, and then on the lower end, as I mentioned earlier, the Maruti Suzuki, which reports on Wednesday, its chairman last quarter warned the sluggishness for the small entry-level cars. And while the Bajaj Auto had to contend with the slower two-wheel volumes.
Bloomberg News earnings specialist Reina Sasaki there. Take a look at how SoftBank is performing this morning in early Tokyo trading. We are seeing losses of almost 5% there, which would be the worst day since the 1st of November. And this coming off the back of those big gains that we saw last week, given, of course, the joint venture with OpenAI. When it comes to that Stargate AI infrastructure investment in the United States. SoftBank has talked about that $100 billion in U.S.-based investment and perhaps more to come in the size of $500 billion. A lot of questions have been posed about what sort of format that funding would take and whether or not that was new funding or not, or if SoftBank would even have that capital to invest. But at the moment, we're seeing that downside pressure in the Tokyo trading session of almost 5%, Paul.
Well, let's take a look at some of the stocks to watch when markets open in Hong Kong and mainland China. Keep an eye on auto stocks in China after the government said it was thinking of relaxing or scrapping purchase restrictions. Macau Casino is also going to be in focus, with hotels reportedly almost at full capacity for the Lunar New Year holiday. And China Life may pop after it flagged 2024 profit jumping as much as 144% due to the country's stock rally. Shery.
A little bit of a mixed picture when it comes to futures trading. We continue to see the downside pressure on U.S. futures down 0.8% as we're headed towards a big week of FOMC decisions, not to mention big tech earnings as well. China A50 futures closed higher, 0.3%. The China show is next.